Dirty dealings, corporate battles, consumer wars. This is Evening 5. The proposed house arrest law will apply only to inmates held under remand for non-serious crimes. Home Minister Datuk Sri Saifuddin Nasution Ismail clarified in the Dewan Rakyat today that inmates who have already been sentenced will not be eligible to serve their time at home. This follows speculation that the proposed law was meant to benefit jailed former Prime Minister Datuk Sri Najib Razak, who has been pushing to serve the remainder of his jail term under house arrest. According to Saifuddin, there are 87,229 inmates nationwide, exceeding the actual capacity of 74,000. Of the current inmates, it is the approximately 28,000 on remand awaiting court hearings whom Putrajaya intends to allow to be confined at home. Remand, also known as pre-trial detention, is the process of holding a person until trial after they have been arrested and charged with an offence. Saifuddin added that inmates held for serious crimes, such as offences punishable by 10 or more years in prison, including domestic and child abuse, smuggling, trafficking of persons, sexual assault and offences requiring mandatory caning will be excluded from the house arrest option. Those eligible for house arrest will be required to wear electronic tags for monitoring purposes. Tycoon Tan Sri Lim Kang is exploring selling his toll road business in a deal that could value the assets at as much as 5 billion ringgit, Bloomberg reports. Citing people with knowledge of the matter, it said Lim, the biggest shareholder of Ekovest, is working with a financial advisor on the potential divestment of a majority holding in the closely held concessionaire of Duke Highway, Consortium Lebuh Raya Utara Timur KL, also known as Kasturi. It said talks are ongoing and Ekovest could still keep the assets. Ekovest holds 60% of Kasturi, while the balance is held by the Employees Provident Fund. In February, the pension fund granted Ekovest an extension of up to 2 years to facilitate and implement an exit plan from Kasturi. Ekovest had said in a bourse filing that it was given a 1-year extension with an automatic extension for another year for the extended exit date under the shareholders' agreement to February 12, 2026. It said it was jointly evaluating with the EPF various viable options together to implement the exit event or any alternative plan in the best interests of the parties. Malaysian bonds are said to be turning vulnerable to further outflows, as local yields are seen rising along with those on treasuries, with Donald Trump poised to be the next US president, Bloomberg reports. Citing Bank Negara data, the report said the nation's corporate and sovereign bonds saw a net outflow of 11.2 billion ringgit last month, the most since March 2020. Along with the fallout of a treasury sell-off, it's that the ringgit's decline brought about by a stronger US dollar is seen pushing up local yields further due to the rising correlation between the two. Philip McNicholas, Asia's sovereign strategist at Boustead Group in Singapore, was quoted as saying the election outcome portends to sustained dollar strength and, coupled with prospective treasury curve steepening, could risk a further foreign withdrawal from the emerging market local currency asset class, with Malaysia's lower yielding bonds at risk. This could see an extension of foreign bonds outflows in October. Malaysia's 10-year yield rose to the highest in 6 months, and the ringgit slid to the lowest since August this week as Trump's victory pummeled emerging markets. The 90-day correlation between the two asset classes rose to 0.63, the highest in emerging Asia. The Public Accounts Committee, or PAC, will launch a probe into the combined 43.9 million ringgit investment loss incurred by Khazanah Nasional and Permodalan Nasional from their venture in e-commerce platform FashionValet. PAC chairperson Datuk Mas Ermi Yati Samsudin told a news conference that representatives of both government-linked investment companies will be summoned to the proceedings, which are expected to take place in the second week of December. Khazanah and PNB have come under fire after it was revealed that the two GLICs invested in loss-making FashionValet in 2018 and suffered significant losses when they exited the platform last year. Meanwhile, a Bernama report said the MACC has frozen several personal and company bank accounts valued at around 1.1 million ringgit belonging to the husband and wife founders of FashionValet. Citing sources, it said the MACC has frozen 11 personal accounts and 6 company accounts. This follows the anti-graft agency's simultaneous raids on FashionValet, the Ministry of Finance, Khazanah and PNB on Monday, during which it obtained financial documents to aid its investigation. The Commission also reportedly searched the couple's residence in Mount Kiara, Kuala Lumpur yesterday and seized items including 11 handbags and a luxury watch, worth an estimated total of 200,000 ringgit. EcoWorld Development Group, via its 81% owned subsidiary Mutiara Balau, is buying 10 parcels of land in Semenyih, Selangor for 742.41 million ringgit cash. It plans to use the plots measuring 847.25 acres for a new mixed development called EcoForest 2, which is expected to have an estimated GDV of 4.6 billion ringgit. The transaction follows Mutiara Balau's participation in a request for proposal process initiated by Boustead Properties for development of the plots, which are located next to EcoWorld's EcoForest Township. Boustead Properties is also the shareholder of the remaining 19% in Mutiara Balau. EcoWorld said it will fund the acquisitions via a combination of bank borrowings and internal funds. The transactions are conditional, among others, upon the approval of the Equity Development Division of the Ministry of Economy. EcoWorld and Boustead Properties also inked a shareholders' agreement, which grants the latter a put option to require EcoWorld to purchase Boustead Properties' 19% stake in Mutiara Balau for 147.62 million ringgit, exercisable for 1 year and 3 months after the completion of the land acquisitions. EcoWorld Project Management, wholly owned by EcoWorld, will be the project's development manager. The acquisition is expected to be completed by the first half of 2025.